Us at Banrion Capital Management. Shana, welcome back to the show. So what do you think here? We got bulls finally trying to make a stand the last couple sessions here.
I think it's encouraging to see, but I do think that there's a whole lot going on right now that's going to have volatility for the near term, and I think we're going to have lots of opportunities to buy attractive names at attractive prices throughout the first quarter.
What do you think about these analysts that had price targets that are now like 30-40% too far away when a Netflix or a Peloton, and they bring the price targets back in and they reiterate buy? I mean, it feels like there's a lot of catching of falling knives, or at least trying to right now. How do we kind of separate out the stuff that's going to make it through this storm and the ones that are going to break?
I think there's a lot of trying to fit the narrative so that you're right going. When you change the tone of your note, but don't change your price target, that tells me that you're hedging your bets a little bit. And so I think that just in general, when it comes to, the sell side analysts and just analysts in general, no one wants to be wrong. But they do want to make sure that they adjust their tone and adjust the way that they're looking at things so that they're more likely to be right, or at least in some cases to be able to explain yourself if you're wrong.
I like that point. Nobody likes to be wrong, myself very much included, but we all got to get used to it at some point. Shana, okay, what about the White House? Who are we going to find out is wrong and right here? Should we be attuned to possible stimulus surprise? It feels like we've lost track of this story with the myopic focus on the Fed. Is there a chance that this Build Back Better program gets broken down and injected into the economy in a way that is still going to be very positive?
Well, I think that we have sort of lost track of this story, but I think it's interesting that the White House had some of the largest CEOs of publicly traded companies at the White House to discuss the potential for the Build Back Better bill and to gain support so that they could go back to Congress and, really lobby for something to go through. I think there's reason to be concerned. You have the Fed, who clearly has been aggressive and hawkish and wanting to address the inflation issues, which are a serious concern for the economy. But stimulus is inherently inflationary. So if you have monetary policy that's hawkish in an attempt to deal with inflation, but at the same time you have fiscal policy that's inflationary, they sort of negate themselves and make it really difficult for monetary policy to do what it's intended to do, which is to address inflation.
Yeah. And the president said that that's on Powell's shoulders. I don't know how to interpret that, if that means that they will feel okay putting more into the economy as long as Powell's high. It's weird. You're right. What's the net of this? And I guess right now, with there being no bills getting passed and general disarray from the political side, I guess the net is generally zero at the moment in terms of new policy stimulus versus not, because the Fed's not stimulating.
Yeah, and keep in mind, we're coming up on the midterm elections, too. So I expect that there will be some attempts to push policy through as we get closer to the midterms, depending on where the polls are showing voters. If they are not leaning in favor of the Democrats, which seems to be the case right now, but not for reasons necessarily related to stimulus, more related to just the economy in general and COVID-related policies.
Sure.
But if it starts to lean more towards the Republicans, I could absolutely see the current administration and Congress trying to push through some bills just in ahead of those midterms. That would not surprise me at all. So it's an interesting dynamic that's going on that I don't think people are paying enough attention to.
All right, like that. Let's talk some specifics here on what's been catching your eye in the selling. Shana, what looks like a good deal? What's on sale and has value?
So it's interesting because I've sort of changed. You know me well enough to know that I, for years, have come on this network and talked about how I like those high growth names, the semis, those tech names. I've sort of changed my tune in the last 3 to 6 months, largely because we're going into an environment that we haven't seen in about 30 years. Rising inflation and rising rates. That's just not something we've had to deal with, and that environment is not conducive to the higher growth names. So I've sort of changed my tune a little bit, and I'm looking more at some of those quality growth names. I like the dividend payers, and I'm also looking at names that do particularly well in the beginning part of a rising rate cycle. You know, when the Fed starts tightening, what does really well? So financials, by far and away, is the number one place that outperforms when we are in the beginning of a tightening cycle. Historically, it's almost undefeated. So that is a place I am spending some time. I like JP Morgan as a name, quality company, diversified, good management. And then when I'm looking just at a diversified basis, I like the Hennessy Large Cap Financials Fund just because Dave Ellison has been doing this for almost 40 years. In my opinion, he's the best in the business, so it's an interesting way if you're not comfortable picking individual names. I also like commodities. Commodities over a full cycle are not always a great investment, but at this point in the cycle, they can be very, very attractive. So if you look at something like, I think it's FTGC, which is the First Trust Global Commodity Tactical Fund. That is a fund that's up almost 30% just year to date, so basically this month. Commodities tend to do well when you're going into a tightening cycle, rising rates, and so on. And I also really like REITs here, specifically residential REITs, because there's a lot of interesting supply-demand dynamics in the residential real estate market, not just for home buying, but also the rental markets that are really conducive to a name like Camden Properties, which looks really expensive, but they went through 2021 with a acquisition spree, and they acquired a lot of properties, but they acquired them in very good geographies, Florida, Texas, places people are moving to where there's a lot of demand. So those are some names that I'm really looking at right now, kind of changing my tune a little bit from where I've been for quite some time.
I like that. And I remember towards the end of last year, the statement regarding growth, in particular, some of the tech-heavy names, where you'd said, look, maybe not keep piling into these. Don't bail on them yet. So it seems like the view you're taking now is kind of a natural transition from that. One thing I wanted to follow up on with the banks, you mentioned David Ellison, Hennessy's large cap bank fund. He comes here on the show quite a bit, and part of his thesis is that the big tech companies need to be included. So you've got Apple and some other big tech giants towards the top of the weighting in his fund, alongside other traditional banks. What do you think about that? When we're coming up with a bank strategy, do we want to have these big techs in there? Does it muck it up?
Well, I think that his point, and it's a good one, is that financial technology is sort of the wave of the future. And so he is very heavy in some fintech names. Apple has financial exposure. They have their Apple credit card, they have their Apple wallets, they have fintech exposure in their portfolio that I think a lot of people don't have a good appreciation for. Given, David Ellison's just experience in the space, I really listen to what he has to say. And so if he thinks that that's kind of the wave of the future, I'm inclined to agree with him. I certainly don't have 40 years of experience covering financials like he does. All
right, love it. Shana, thanks for the thoughts here and the specifics on what you like in the market right now. Good stuff.
Thank you.
Sure thing. Shana Sissel, founder and president at Banrion Capital Management.